Hi, it's Anthony here. Welcome to the video. To start off with, I just wanted to reassure you that I'm the real deal here. This is not an AI generated digital clone or anything like that. So I've done some research on the US strikes in Venezuela and put together this presentation. Okay, so we're going to look at a situation we call the Venezuelan Gambit. It's not about politics so much. It's a breakdown of how one specific US strike is reshaping the global map for gold, silver and oil. Okay, so let's just take a quick look at what happened. We're dealing with a major geopolitical flashpoint. The event itself was a strategic US military strike on Venezuela. Okay, the outcome was swift. Venezuelan leader Nicolas Maduro was captured, currently being held in New York. Naturally, the reaction has been intense, with global markets on edge and widespread speculation about the fallout. Okay, now you have to understand this isn't an isolated event. We're in the middle of a resource war. Okay, we're entering an age of neo-imperialism where superpowers are actively carving up the world to consolidate power and secure strategic resources. These geopolitical actions are increasingly driven by the desperate need to control critical materials like oil, gold, and industrial metals. Let's have a look at the immediate financial shockwave, specifically for gold and silver. Okay, if you look at the chart here, you'll see a familiar pattern. Following major escalations like the invasion of Ukraine or the Israel-Hamas conflict, we typically see an initial surge in gold prices. However, I want to offer a word of caution. Historically, these initial gains are temporary, and prices often fall back in the following weeks. So while the short-term price spike is predictable, the real game changer is the acceleration of de-dollarization. Actions like the seizure of Russian assets back in 2022 and now this strike on Venezuela are eroding global trust in the US dollar as a safe reserve asset. Nations fear their assets could be next, so they are reacting by shifting away from the dollar and towards neutral assets, with gold being the primary beneficiary. Now, you don't have to take my word for it. The proof is in the vaults. Following the asset seizure in 2022, central bank gold buying surged to record levels. So if you look at the bar for 2025, you'll see buying spiked in October, just 1 month after the initial US action began. The litmus test for us will be 2026. If purchases remain high despite record prices, it's the clearest sign yet that the dollar's dominance is ending sooner than expected. Before we move on, I want to address a rumor circulating online that the US strike was designed to secure Venezuela's silver reserves. Let's call that what it is. I believe it's a myth. If you look at the comparison here, Venezuela's silver reserves are insignificant on a global scale compared to countries like Peru, Australia, or China. The real economic driver here is gaining influence over Venezuela's vast oil reserves. With new US investment, production, which has been down since the early 2000s, could ramp up significantly. So this creates a new flood of supply that could drive global oil prices down in the short term, potentially hitting that $30 or $40 a barrel range that you see on the gauge. This shift creates a tale of two oil sectors. The clear winners are the US majors like Chevron and Exxon, who are positioned to invest in and profit from this expanded production. The losers, unfortunately, are likely Canadian oil sands, because Canadian heavy sour crude is a direct substitute for Venezuelan oil. So this new supply creates fierce competition that could badly hurt Canadian producers. However, the situation creates an unseen catalyst for mining stocks. Mining companies are in a position to benefit from a perfect storm. It's a simple equation. Higher long-term metal prices combined with lower short-term energy costs leads to a significantly increased miner profitability. This brings us to the junior miners, which may be primed for a breakout. While gold and silver have hit new highs, this sector has lagged behind. If you look at this chart, the junior gold miners ETF, GDXJ, has a massive performance gap. It needs to rise 47% just to match its 2011 peak. This geopolitical event could be the catalyst that finally closes that valuation gap. So to summarize, here's a strategic outlook, and not financial advice by any means, but I'm personally bullish on precious metals long term, driven by de-dollarization. Okay, I'm mixed on energy. You could expect a potential short-term price drop that favors US majors but challenges the Canadian producers. And I'm bullish on mining stocks, as they benefit from both rising metal prices and falling energy costs. That, in a nutshell, sums it up. In an era of resource wars, understanding the map is everything. Now, I'm bullish gold, and I wanted to show you what we have. Those of you interested in trading gold, we have access to a gold trading EA. Had some really nice results, 2024, 2025. And if you head over to my website, anthonyfx.com, click on the Forex account management link there. Scroll down, you'll be able to click into the gold EA info, have a look at that. If that's of interest, it's currently discounted, and all the information's on my website. And if trading in general is of interest, we have a 14-day and a 7-day free trial. You're welcome to test the waters with first-hand experience of a trading strategy and a system that could make a difference in a world where unemployment is looking to increase dramatically, and it could be worthwhile for you to look at other income possibilities. Okay, so with that, I hope you have a fantastic day. I'd love you to comment. If you have any thoughts on this, definitely leave a comment below. That would be awesome. A thumbs up would be fantastic. Help me with the channel. Subscribe, hit the bell to be notified, as I'm going to be posting more videos like this. So with that, enjoy your day, and I'll see you in the next one.